So a lot is going on in the economy. People are talking about the tariffs. People are talking about the potential of a recession, GDP going down, the stock market crashing. Some people say that Trump just does things with no reason and he doesn't understand them. And as much as I think that that explanation is kind of funny, I don't think that's what's going on. I think there's a reason we've seen so much back and forth with these tariffs. It's a theory rooted in what's happening. So let's go into how he's gone back and forth with these tariffs because it's been a lot more than just what we've seen this week. This started on the campaign trail when he said day one in office, tariffs are going into effect on Canada, China, and Mexico. Then, when he got into office, he said on February 1st, they will start. And that's pushing the deadline down a couple weeks. He did boot that. I think he was avoiding some kind of spiraling in the stock market in his first few days in office. But then on January 26th, he threatened this tariff on Colombian goods. And Petro, the president of Colombia, responded with this huge speech, really going through the history of imperialism and how he's not going to let someone who's an authoritarian like Trump tell him and his people what to do in this way. And so he said, fine, we'll impose retaliatory tariffs. We'll change up how we do trade. And they ended up having Trump call them off. They came to an agreement to not impose these tariffs. Then February 1st rolls around. He signs an order saying, actually, we're going to do this on February 4th. And so he has this habit of saying, tariffs are coming, they're coming on this date. Then that date rolls around and he kicks the can down the road. So on February 3rd, the day before they're supposed to go into effect, he agrees to a 30-day pause. And then on February 4th, he decides, this pause is just for Mexico and Canada, our immediate neighbors, but I am going to impose tariffs on China, not the full 25%. We're going to do 10%. And I'm going to announce some more tariffs in a few days on February 10th. On February 10th, he announces that there will be tariffs on steel and aluminum, 25%, starting March 12th. Then, on February 13th, he starts talking about imposing tariffs on target countries, including European countries, up to 25%. So he's really been kind of all over the place. Whether it's imposing his campaign promises of tariffs on our neighbors in Mexico and Canada, and then, his number one tariff enemy, China. So on February 25th, he decides to sign this executive order directing the Commerce Department to consider a tariff on copper, so targeting specific imports. Then March 1st, an executive order for the Commerce Department considering a tariff on lumber, which is really specific to Canada. We do get a lot of lumber from Canada. Then March 4th, he decides that the 25% promised tariff on Mexico and Canada is finally going to go into effect. And the tariff on China that's in place of 10% is going to be doubled to 20%. He has already seen a lot of headlines about the potential fallout if we can't rely on Canadian energy like we used to, and if companies are going to have to pay a 25% tariff on Canadian energy. So he decides on the energy front from Canada, it will be just 10%. Then on March 5th and 6th, after we have massive retaliatory action from Canada and Mexico, he says, we're going to do another one of these 1-month extensions. And the next day he says, actually, April 2nd is our new big date. And this comes as there's headlines of empty shelves where Jack Daniel's whiskey and other American spirits used to be that were taken off by the liquor control boards of Ontario, for example. They have full monopolies over the spirits sold in Canada. So this is like a pretty easy move for their government. Whereas in the United States, it would have to be a big coordinated effort of private companies. Not in the case of North Carolina, because we do have the ABC there, which is not so different from the monopoly on alcohol that they have with the liquor control boards in Canada. But nevertheless, they were able to take sweeping actions very fast. Trudeau decided to keep the retaliatory tariffs and retaliatory actions in place, despite Trump going back and forth, that they weren't going to play this ping pong game. The whole time tariffs are being imposed and lifted, The stock market is responding, of course, because companies have to make decisions about moving capital around. It's going to affect their projected profits if a cut of their revenue is being spent on importing, things from other countries that they'll directly sell, or if they're importing raw goods for their manufacturing. So the stock market is just up and down, which is really interesting. It's tumultuous and scary if you have a retirement fund, but if you're one of Trump's really rich buddies and you have $1 million you can just play with in the stock market, and theoretically, let's say, you hear from someone in the White House that he's going to reverse his decision about the tariffs tomorrow, it might be worth it for you as a day trader to move your millions around accordingly. Because if the stock market goes down with the expectation that tariffs are going to be in effect within the next few days, and then it turns out we're opened up for another 30 days and tariffs seem less likely, you might see your stock prices bump back up. And as a day trader, when you're working with about $100 million, a 2% change actually translates to about $2 million. It's not nothing. It's easy cheese. And I'm not saying this is happening. And I'm not saying Trump is doing this, because it's illegal and it's insider trading. And of course, Trump and his friends would never do something like that. But it is very possible and something to think about, especially as you have, this running rumor that Trump's announcement for the crypto reserves was all a pump and dump scheme. This isn't so different from that. So I'm not saying he's doing it. I'm just saying it's possible. Traditionally, the stock market was more of this thing where you see a promising business that's likely to be profitable. And maybe you hear that the grain crop is not so good this time around and you're able to invest accordingly. That's not the kind of insider trading we're talking about today. It's also not the kind of investment that happens today. A lot of the investment that's happening in Wall Street is more like gambling and this kind of day trading, that if you got a tip from the White House that they were changing their tariff policy and considering tariffs on Europe, massive tariffs on China, Mexico, and Canada getting pushed around, that's really useful because we do see the stock market fluctuate so much within a 24-hour period. So that being said, let's talk about the economy as a whole. Are we going into a recession? What is happening? It turns out, as of about 6 days ago, Trump was boasting to Congress saying, we have the greatest economy, we're experiencing great success. He talks about the stock market a lot as a measure of how good the economy is under his leadership. Then we saw Thursday, March 6th, people were talking about that the Atlanta Fed, which projects GDP. And they were saying that we would have about negative 2.4% as the estimated GDP change in the first quarter of 2025. That doesn't look so good for Trump. Now, a recession is traditionally defined as 2 consecutive quarters of GDP decline. And so having 1 quarter of GDP decline has everyone on the financial news talk shows projecting whether or not we're going to see a recession. They start looking for other indicators. So it's not something you want to have happen if you're president and you're boasting that, GDP is a good measure of a good economy. Now, the 28th of February, they were saying it could be as high as 3%. This was getting reported out. Then we saw on Tuesday, March 4th, Trump decided to disband the Federal Economic Statistics Advisory Committee. This is one of the bodies that helps produce estimates on GDP. And so it seems that this is because the numbers are bad and he doesn't want people to see them. And the letter that was sent out in an email to disband, the FESAC was very similar to a lot of the emails that I have reviewed from federal employees getting fired at FEMA through DOGE and Trump's executive actions. So Reuters had this email, and it read, the Secretary of Commerce has determined that the purposes for which FESAC was established has been fulfilled, and the committee has been terminated effective February 28th, 2025. And, at least 4 FEMA employees that were terminated had been fired with these letters that cite Article 2 of the Constitution, saying directly executive power shall be vested in a president of the United States of America. And this termination is an exercise of that power. So it's just Trump deciding to fire federal employees through the guise of governmental efficiency. But it seems that this is directly correlated with some bad GDP numbers about to come out. So his plan has been, if the data looks bad, we're going to hide it. This was something he did in his first few days in office with the CDC, preventing bird flu data from coming out. I talked to a lot of experts and researchers that were afraid to talk about the administration's policies when it came to bird flu and the CDC data being hidden. But these were publications that had been coming out since the 50s and were relied on by a lot of epidemiologists and researchers and virologists across the country. And so because bird flu was on the rise, I guess he didn't want people to see that data. This seems like something similar is going on. But in terms of a recession, do I think this negative GDP growth at 2.4% in the first quarter is signaling a recession? I don't, based on what we're seeing so far. If the tariffs go into effect and we see a chain of bad reactions in the economy, absolutely. If consumer confidence is down as a result of projected higher prices as a result of these tariffs, that is something that could spiral the economy into a recession. But right now, I'm not seeing the indicators. I don't think 2 consecutive quarters of GDP decline are enough. And I think that's because productivity is just no longer a measure of economic well-being for most Americans. Wages used to increase in correlation with productivity in the country. We're saying that hasn't really been the case since 1979, where you see this lighter blue line on this chart here by the Economic Policy Institute showing that wages and productivity really diverge. So wages are on the lighter blue line, productivity is on the darker blue line on top. And we've seen productivity in the United States increase steadily while wages remain stagnant. So the question is, where is the money being made off of those workers' productivity going? GDP is a reflection of the money made off of the goods and services sold from that productivity. And workers are paid wages to produce goods and services. So why are they not getting the fruits of their labor? Obviously, we have seen that owners of these companies and shareholders in publicly traded companies are getting a lot of dividends. A lot of companies are run to increase returns to shareholders. Profits are increasingly kept by the people who own companies and invest in them, and they're not shared with workers as wages. And so if we're judging the how good an economy is based on GDP, it turns out it's not such a good measure anymore. While this is happening, we've also seen prices go up. So the purchasing power of the dollars made over the past 40 years for workers are not getting them much more. And that's a part of this crisis with inflation right now, because we're not seeing wages grow in tandem with price increases. And it's really squeezing workers from both sides. This became much worse during the pandemic when we saw corporate profits being the number one contributing factor of price increases, absorbing about over 50% of the dollars made off of price increases, with around 8% going to workers' wages. And so when Joe Biden was using all of these metrics of like, we're saying the stock market is good and GDP is good, and all of these big macroeconomic indicators show that I have one of the strongest economies ever, workers were struggling. And there are some metrics that are produced by the CFPB that show this. So the CFPB, of course, is under fire by Doge and Trump. I don't know that we'll get more of these statistics soon, but I also have this interesting bar chart that we can take a look at. It shows how financial hardship and instability have worsened since 2019. This was produced by Steven Semler, who is a big graph guy and a policy analyst with a focus on the working class in America. But since 2019, just before Biden took office, we've seen that people are experiencing very low financial well-being. We've seen overdraft or non-sufficient funds fees reach about a third of the country. Fluctuations in income have gone up. Difficulty paying bills is becoming more prevalent. 43% of Americans struggling to pay bills. In a country where the message is Joe Biden created the best economy ever, a lot of average people said, well, maybe I don't want to live in that economy. And so under Trump, I'm not saying he's a better alternative by any means. I think it's awful. We won't even have these statistics to assess how the working class is doing. Um, we might even see GDP not be as good as it was under Biden. So at least we had the great economic metrics when it comes to the macro economy under Biden. But if you really care how people are doing, of course, the tariff policies under Trump can make all of these metrics worse because companies are very likely to push the cost of them onto consumers. And so we can look at a few other metrics while we don't have new CFPB data to say, okay, under the first few months of the Trump administration, how has this tumultuous back and forth and changes in the stock market gone on to affect working people? But we do have a few other metrics that we can look at. So the Bureau of Labor Statistics puts out some pretty regular data on unemployment numbers. It was at 4.1% in December. In January, it was at 4%, and in February, it was at 4.1%. So we're not seeing a major spike in unemployment, which would be an indicator of a recession, especially under the Somm rule developed by Claudia Somm, which looks at, a 3-month change in unemployment and compares it to the previous 12-month period. And so we're not seeing big jumps in unemployment over the past 3 months. We are seeing that CPI is on the rise. So we are seeing that inflation is continuing to grow in America by about 0.5 percentage point. That's a month-to-month increase. The data is from January. We don't have February data yet, but we should get that within the next few days. Now, we can also look at Bureau of Labor Statistics data and Bureau of Economic Analysis data, which shows that monthly import prices are the highest they've been since 2022. So people are paying more to input goods, go figure. That definitely has something to do with Trump's tariff policy. And we are seeing some companies preemptively raise prices in anticipation for these tariffs. They do not want to cut into their profit margins and their promised returns to their beloved Wall Street investors. They would rather push the cost of tariffs onto consumers. And if they can start raising that revenue that they're going to have to spend on tariffs now, they're likely to do it. And I think that once we reach a point where if all of these tariffs go into place, 25% on China, 25% on Mexico, 25% on Canada, and maybe 25% on some European countries, we could be in a place where, because workers' wages have been stagnant for so long and they can barely afford their bills and they're overdrawing their accounts, we could see a lot of regular working people deeply struggling in this economy in a way that's not reflected in GDP, not reflected in the stock market. And we won't have a lot of data on it thanks to Trump saying bye to the CFPB. And so that's not a good position to be in. Nevertheless, things don't look as bad as some people would like to say when they want clicks on their doom and gloom videos about the economy. So hopefully that's a little bit reassuring. But nevertheless, things are a bit crazy right now. But I'm always happy to do these regular breakdowns because I know what we get on the news isn't exactly the full picture. So thanks for listening. Be sure to comment on any other sort of economic analysis videos you want from JobSite, and send me a message as well if you have some special requests for things you want us to cover or news you want us to break down. Thanks, y'all.